Hey folks, most traders draw levels and really just hope price reacts, right? Or that price reaches that level. But what if you could actually see the probability of price hitting a level before the session or day or any candle even forms? So in this video, I'm going to break down and show you the statistical zone indicator and the major upgrades that come along with it. It basically calculates the odds of price reaching these specific levels using TradingView's historical data, and pretty much removes the guesswork and lets you focus on high probability setups. And it's valid to say high probability because it's based off the historical data. So a lot of traders rely on just, support and resistance lines that are pretty much subjective, but they work to some degree. And so one trader might draw a level here, another somewhere else. The problem is that without data, those levels are basically educated guesses, which is fine if you have market experience. But to have this certainty and probability really just adds that boost. So what we wanted to build was a way to measure how often price actually reaches certain levels based on historical data. So this indicator plots levels above and below the open, whether that's the daily open, a session open, a 4-hour open, or any OHLC reference you want to use. The difference is that each level now has a probability tied to it, as we can see here with the percentages, showing you the historical likelihood of price reaching that level and tapping it once at the very least throughout that session or range. So for example, if this level shows a 76% probability, that means historically price has reached that level 76% of the time during this weekly range, based on the data the indicator analyzes automatically from historical price action. So instead of guessing where price might go, you can prioritize these levels as targets where the probability is actually higher. So let's go into the settings before we look at a couple of examples and show you exactly how it looks and works. The probability settings, which is a brand new upgrade, is going to be located right here in the middle. And so when you turn all these levels on, you're going to see the probabilities of the deviation level, the midline probability, which is the middle level here, and the extension probability, which is all the way up here. Now, it has a specific look back based off the OHLC time frame that you use. So if I want to incorporate 4-hour, 1 month, for example, you could turn all those on at the same time. So we can turn on the monthly now for a quick example. But the probability settings are going to automatically use the look back that you have for those statistical ranges. So not only do we have statistical ranges now, but now we also have the probability of those levels getting hit, which is amazing. So here you can see the monthly range for March, and there's an 84% chance of hitting this level throughout this month and a 60% chance of hitting this level. So knowing that, you can look for trade opportunities. But before diving into the examples and trade opportunities, it's important to know that the probability settings use this look back up here. If you want to separate that, and let's say you want a look back of 35 for the actual zones, but maybe you want to look at different probability opportunities on the actual levels based off the current price action, then you can change that. So you can separate the probability look back from the look back of the actual zone. So instead of having the same look back, you can separate the probabilities. Now, next setting is super important to understand. This is the enable complementary probability. Super simple to understand. It basically means that based off the extremes of both zones here, so we have an upper zone, a lower zone, it evens it out. So instead of being really extreme, so for example, I turn this off, you can see it says 82%, 54%, etc. When you enable this on, it evens it out based off the two zones. So it doesn't make it as extreme, and it gives you not necessarily more accurate probabilities, but it gives you a better opportunity of observing more realistic data. Default is off because this is already still pretty accurate in of itself when it is off. Now the rest of the indicator also comes with SMT, higher time frame SMT. You can filter those out by the statistical levels as well. However, this video is simply going to go over the probabilities and how to incorporate that into a trade opportunity. Because as we look at the examples, the indicator is going to plot several statistical levels, right? So we're going to go back in time here and just look for some decent opportunities, whether that's on the 15-minute time frame or any time frame really. And we're going to turn off the monthly here just for a brief second. One way a trader can use this, or that you can use this, is by planning your trades around these zones. So for example, here you can see the daily chart or the 15-minute chart with the daily range. And when you start with that daily range, you have your statistical zones that do not repaint once the daily range is formed, keeps it on there. And if you're looking for a high probability level, well, look at the ones that are above, I would say 50%. You have one here. Usually the closer levels here are always almost going to give you pretty good probabilities. So this one is 62% and 77% chance. So because there's a gap down in price action, this level has already been tapped, meaning that it's already been fulfilled. I might be looking at this opportunity. Basically, what it means is throughout this day here, because I'm looking at a daily range, I have a 77% chance of that level getting hit based off the previous historical days. So knowing that, I might look for a short opportunity, and that depends on your price entry technique. So I use MBZ or inversion for value gaps. The MBZ model really gives me solid opportunities. So if we were to turn that other indicator on, you'll probably be able to spot some great opportunities there, especially if I turn off the session filter. Now the point is, depending on your price entry technique, these levels give you that probability opportunity. And this is applicable to stocks, etc. So I might go short here, depending on the model entry, right? So what's important to understand is you can also customize these sessions. So let's go down to the 5-minute. I'm going to turn off OHLC timeframes. These are just candle timeframes. So for example, we have auto setting on. You can see it's now plotting the 4-hour range. So these are the probabilities. But what if I want to look at a specific time slot? So for example, I might want to look at 5 a.m. to perhaps 12 p.m. And so you would go down here to the session timeframes and turn one of them on, or however many you would like on. And based off that, it's going to still apply the probability settings and logic and labels if you have those settings on. It applies to both OHLC and session ranges. So here we can see how it played out previously. We have a 71% chance of that getting hit, 48% chance, and so forth, right? So let's see how it played out here in this upcoming day. We have 5 a.m., 74% chance, it's already been tagged. We have a 71% chance there, and then we have a 42% chance up there. So depending on your entry technique, etc., you're going to be able to play out the probabilities and look for opportunities in that direction. And so if you miss a session, let's say you want to customize it even more, you begin your day, you might have started the day later on, well, you can completely customize the session as I previously mentioned. So you can put it from 10 a.m. to around market close, and the probability is going to adjust because of that. So with that being said, this can be applicable to stocks, anything else, right? And this is a quick tutorial and upgrade on what probabilities can offer to the trading model that you might be using. So personally, how I like to use this, based off the MBZ model, I like to incorporate the daily range. So I like to turn this off. And I also like to look at the weekly range as well. So what I like to do is start my day off trading New York, and I look at the probabilities of the daily range and or weekly range. So by the time I show up for New York, if the levels have already been tapped, I might be looking at the weekly range levels, as we can see here, in the probabilities tied with that. And that's the way I like to play it out. So I hope this brought some insight into the indicator, and it gives you that strong framework, right? It's one of the more powerful features that has just been upgraded for the indicator. And why it matters, it's pretty much the main idea here is it's removing randomness. Instead of drawing levels and hoping they matter, you're actually looking at levels backed by historical probability. So for me, that's super important. It gives me that confidence boost and a stronger edge. And over time, this helps you focus on actual higher quality setups and just avoiding unnecessary trades. So if you found this useful, check out the rest of the videos on this channel. And for more information about the statistical indicator, visit the website. If you want to see more breakdowns like this, where we combine data with trading frameworks, consider subscribing, liking, and leaving a comment. In future videos, I'll be showing how to combine these probability levels with the actual entry models, and we'll be looking at stocks, etc., to refine the timing even better.